We literally didn't get through half the things that they talked about. That's
I'm
fine.
going to blame you for that. You were driving the conversation.
That's fine. There's been the challenge thus far with all these.
Yeah.
But thank you.
Good to have more than enough to talk about.
Hi, welcome to The Future We Build. My guest this week is Abigail Dean, Head of Strategic Insights at Nuveen. And we start there, really, Abby's role, Head of Strategic Insights. She's come from a background of sustainability into this broader role at Nuveen, where she looks after not only sustainability, but also research and tech. And that's what we drill into. Kind of what does that mean for Nuveen? How are all those sort of information, metrics, data points kind of convened? And how do you make sense of them? And how does that sort of get manifested through to the investment committee to actually make real world decisions? We talk about this, we talk about some of the other challenges facing institutional capital. In particular, we get into the S of sustainability or ESG, the social housing, affordable housing, the housing crisis, and the role of private capital, and her views on how that, particularly partnered up with public capital, can help alleviate some of these challenges. And unfortunately, data is still a big problem in the industry, and she calls that out as still an issue that needs to be resolved. It's a great episode. I hope you enjoy it. Let's get stuck in. Thank you, Abby, for joining me on The Future We Build. Really happy that you're here. I was mentioning to you before we started, I really was keen. I mean, obviously, you know, I've come out of a role similar-ish to the role that you have, although I'm keen to sort of get into your path and particularly your current role at Nuveen and I think in particular, your journey is a great example, I think, of someone who's sort of come from, if you like, within the sort of sustainability, quote unquote, I guess, education and then I guess discipline, and I've been able to sort of branch out a bit.
Yeah.
Whereas over the last, I guess, 10 years or so, we've seen quite a lot of people who've been on the outside of the sustainability industry, sort of jumping into the sector, which is great. But obviously, and with what's going on right now, there's some challenges around kind of, well, what does career prospects look like for sustainability people? And, you know, once you're sort of within that channel, you know, where do we go? And so I'm really keen to sort of understand just a little bit about your journey, but just for the benefit of the listener, because, you know, obviously our history, we both go back to Upstream and JLL. What was Upstream? They officially, I think, got rid of the title now, got rid of the name of the company. To 2006, 7, 8, I forget when you joined, but around that time. And obviously the journey that we've all been on as a sort of that group, obviously had Julie and Sarah on one of the episodes. And so just understanding, I guess, in your words, kind of, you know, that journey that you've been on, obviously some of that sort of shared at JLL, and then into your role at Nuveen, and maybe just give a bit of an explanation of kind of what is your role, because it's, you know, sustainability, I don't think it's actually in your job title anymore.
Yeah.
But I know that it sort of sits under you in terms of a responsibility. So it'd just be helpful to kind of sort of lay that out and sort of understand, you know, kind of what your day-to-day responsibilities are.
Yeah, so I head up the Strategic Insights team at Nuveen, and that brings together the sustainability team, which is a distinct team, but sits within Strategic Insights alongside research and PropTech. And the thinking of bringing those three together was that all three of those topic areas are looking at are the things that are impacting real estate value in the future. So within sustainability, you've got the energy transition, physical climate risk, other topics to do with sustainability, what's going to happen, you know, looking future-proof buildings, looking at what's going to happen down the line. Within research, you've got the near-term forecasting of rents and values and yields. You've also got the longer-term analysis of those bigger mega trends around demographic shifts, urbanisation, geopolitics. I don't think you can look at the sustainability trends and those trends in isolation. They impact each other so much. And then you've also got PropTech and the broader themes around technology, digitalisation has had a huge impact on real estate over the last decade and very much continues to do so. So we felt that those three belonged together and that the people working in those areas were valuable to have a more unified voice when advising our investment teams on what kinds of strategies they should be developing, what kind of real estate they should be buying, and how to think about risk and opportunity. And you very much needed to encompass those three together. So whilst we have those three specialists, teams, what I'm doing in leading that team is really trying to foster that collaboration between those three areas, but wherever possible, have them working on joint projects together, having them reviewing each other's work. And I do think that that having those three disciplines together, I feel makes that whole area a lot richer. I think it means we give a lot more interesting and informed advice, and it means that the people in those teams think a little bit differently. I think it makes them all better at their jobs. So that's that thinking, and it's, for me personally, I love leading that multidisciplinary team. The people are fascinating. I have learnt so much in the last 4 years from bringing on that research and PropTech piece. My colleagues in those parts of the business teach me so much all the time, and I think that it's given us a very different perspective on how we integrate sustainability and how we manage it.
That's it's super interesting, and I guess obviously we haven't spoken about this before. It's sort of, I guess, innately knew that was what your role was, but actually just hearing you lay it out, it makes so much sense, because even just thinking back, days at LaSalle, but also prior to that as an advisor, it was, the sort of, there's not necessarily competing or sort of it was separate, but there's always this sort of thinking, well, hold on, well, why are you not sort of integrating the thinking around long-term transition with the way that you're getting your forecast done? And, it makes complete. So you're sort of sat there as the sort of guru getting all this information.
They all just make me sound really intelligent. Thank you, guys.
That must be a great position, because, when you are in that, I guess, quote unquote, sustainability sort of vertical, whatever you want to call it, there is an element of you see the world in a certain way, but when, and I guess when you get to a certain level of seniority, when you're sat around the board or the management, you hear, and it's kind of the point of being, senior manager, you start to hear the points from the other parts of the business, but to actually have it now structured such that, the business is trying to understand all of those together and then make some sense out of it. I don't think I've heard, I don't know, is there another company out there that...
I do think some others do have that broad approach as well.
And this is not just real estate. You're across.
Well, so that what I've just described is real estate. As you know, we at Nuveen, we also have different real assets investment capabilities in infrastructure and in natural capital, and I do have a role that looks at how we're aligning across that, but I don't have people that report into me in those. They have their own distinct specialists who are very knowledgeable and specialists, but we do have a sort of strategic insights approach across those different disciplines, and as much collaboration as possible. And I think the best example of this, we brought out some work a few years ago, updating our thinking on megatrends, and that was very much a collaboration across the different real assets space, including input from people across infrastructure, natural capital, and real estate, thinking research, tech, and sustainability. And that, for me, is the best demonstration of what that collective thinking looks like. And we continue to revisit that, and the people involved in that continue to collaborate.
So, and you sort of mentioned it before, but one of the things I was keen to understand is, so, you've got, so you have the sort of short-term, near-term, long-term, all these different challenges, risks, and there is just so many things to sort of grapple with. You've structured the team. That sounds like it's a positive thing. How tangibly then do you sort of translate that into, let's say, deal flow? So in terms of the IC, for example, how does that sort of manifest as a challenger or a decision maker as part of that kind of IC? Is it still, curious.
So we have 3 regional ICs for real estate, one for Europe, one for Asia Pacific, and one for the US. Within each of those regional ICs, we have somebody who is a voting member from both research and sustainability. So it's not a single strategic insights vote, it's 2. And they collaborate, and there's often quite a lot of discussion between the 2, but there are separate papers, and they have slightly separate perspectives that they're taking, but they're much more unified now than it would have been in the past. And actually, I think it's important that they are slightly separate, because there are different considerations for both.
Well, it means that sorry to interrupt, but it means that you or your team you're not the one having to necessarily make that decision. It's the C-suite or the investment committee that have to kind of understand and hear those. Because I'm guessing there must be, right? There's just the tension still that we all, and previous guests I've had on the podcast, we've talked about just the sort of short-term, long-term, and just how do you kind of, still kind of get that balance between.
And I think, what we've tried to do, for me, the actual IC itself and the vote on the IC is that's in a way that's the kind of final piece. If something at that stage comes up, which means that a deal is being seriously challenged from either sustainability or research, then that's probably indicative that something hasn't gone quite right in the longer process. So I think the more meaningful change that we've seen over the last few years, and I'm sure this is very similar at other organisations, is a much better integration of both the research and the sustainability into the investment process, engagement all the way through. We have pre-ICs for most of our deals really now. So things that are raised at pre-IC, and then it's about defining what is it that we're going to need to confirm in due diligence to make sure that we've got this pricing right and it's reflected these risks. And that's the key. You're rarely, I think, looking to throw something out at that stage. What you're looking to do is make sure that you're paying the right price for it, that any risk is appropriately priced in, that the business plan reflects what's going to need to be done and has been stressed to look at, we may have to invest more in capex to make this building align with market expectations on net zero. We might need to factor in that there's going to be some physical climate risk here. So but that happens quite early on in the process, and if it doesn't, then it's not going to make it into pricing anyway. So that's the IC stage is really far too late.
Do you know what? It's so true, because just thinking back to my time at LaSalle, similarly, right, there were three ICs, and one of the discussions often was, should I have a seat or should the sustainability have a seat on the IC? And actually, I was quite resistant of it, not least because the amount of time and effort it takes, and therefore you're not spending time on something else. But actually, more to that point, and it may be just as a sign of, I guess, maturity of the organisation, but I was far more interested in spending the time building out the workflows, the guidance, the support, and then sort of sitting alongside the transactions teams, and with my team particularly, helping them, as you say, way before you even get to IC. So, how are you sort of underwriting this? How are you reviewing this? What are the things you need to be thinking about, even when that deal lands on your desk? Because then, that's a much more efficient way of operating is, well, actually, no, this is not going to stack up. Let's move on, rather than, spending a huge amount of man hours getting it to IC. So, fully get that.
Although I probably have a slight difference of opinion to you on the importance of having that voice on IC. I do think it's important for a few reasons. I do think it means that there's the legitimacy and credibility of the whole process is all just taken that much more seriously, knowing that somebody is going to vote on this at the IC with a sustainability voice, and therefore you really do have to incorporate it into the process, or there's going to be ramifications, and nobody wants their deal to come to IC and have somebody who's a voting member call out that the process hasn't been followed properly. And then I also think for a lot of our investors, it's really important to them to know that there is somebody from the sustainability and the research team that has that
I found that
vote.
increasingly coming up in RFPs and RFIs, actually. And I don't disagree with you. I think it just comes down to, frankly, time. It was, do I spend my time here, or do I spend my time there?
And the process is more important. And I agree that where we have the most impact is integrating it into that underwriting process and the due diligence,
but I think you're right.
Deal sourcing.
It was, and one of the things we were thinking at the time was, education, training, whatever you want to call it, for them to the IC. But then you're always, are they going to ask those questions? Are they actually, and so actually, you're right. Having someone there that is going to challenge, because it's all very well providing the dashboard or providing the information, but if people don't really understand, well, what are they looking at? So no, I get it. I think we hear this a lot, but just the sort of capacity of the sustainability team, whatever you want to call it, most of these teams are stretched. Most of these teams have got, a lot to deliver. And so it's kind of, where do they prioritize? I mean, that's what I found was just, what's priority and where do we focus our efforts? Just on that then, in terms of maybe just sort of within the sort of, the broader team, but certainly within the sustainability team, obviously there's a lot, our industry is, with regulation and all the sort of paperwork that comes with that, and the increasing scrutiny of investors and the sophistication that, that they're showing. I had, Vincent on from Green as one of my first guests, him talking about, the sort of capital coming into real estate and what they expect back. We talked about GRES, we talked about some of the other benchmarks. But I'm just curious to kind of get your thoughts. I mean, on, I guess, the construct of the sort of resourcing that you have available with that, quote unquote, sustainability capability within Nuveen, and kind of how that's allocated. Because I guess the last sort of 10 or so years has very much been kind of, I guess, almost running to catch up with regard to, disclosure, reporting, data, just trying to get a handle on what are we doing and how do we communicate it, versus what I'm sensing now, and certainly, the sort of pressure is coming on, investors and others, is to execute. And so I'm just curious, kind of the makeup of your team and kind of how you balance those, and they shouldn't be competing, but they do tend to require a different skill set.
Yeah. I mean, I think within the sustainability team, we have people who specialise in disclosure, reporting. That includes GRES, all of that stuff, at a more strategic level, and SFDR and all of that. We then have people who specialise on the data specifically, and the data analytics, and that obviously feeds into the reporting, but it's not just for that. And actually, increasingly, that's being used to enable us to make better investment decision making. So, and then we also have team members who specifically focus on the implementation and getting things done. And one of our team members who does that in Europe is an ex-asset manager. And that comes about you. You talked earlier about people moving from outside sustainability in. That has been incredibly helpful to us to have somebody with an asset management background take control of how do we actually get sustainability done, how do we feed it into the day-to-day of asset management, how do we break down some of those barriers and the difficulties. So that's kind of the split. So I would, and then...
Is it 50-50?
I think it was at one point. I think we've tipped over to slightly more of the... if you put strategy and client engagement... not on the reporting side, then I would say it's probably two-thirds getting things done, strategy development, client engagement, and one-third reporting. But I think that client engagement piece sort of sits between the two. And I think it also ebbs and flows. There are certain times of the year, particularly around, the 3 months we're coming into now, where it's probably more like 60 to 70%.
Our heart goes out to all the people out there. It's incredible. That's interesting, I guess. I mean, again, just thinking back to something that, one of the things I look back at LaSalle, super sort of happy and proud of, and it's certainly not, all my doing, but I'll take credit for it, is is exactly that, is the construct of the team, and thinking about, the sort of the team that was there and before I joined, and for different reasons a lot of that team wasn't there as I move forward, is thinking, okay, well, how do we build the resiliency and sort of the operational sort of element into this capability? And a lot of it was exactly as you say, two individuals coming across from the asset management team, partnering up with two, if you like, technical experts who were within my team, and that foursome became, right, you are the sort of implementation capability within the business. And they were so valuable to the rest of the business, not least because you now had the sort of technical expertise, but you had the route in via the existing relationships effectively of the asset management team. And actually that alone to me was like, okay, that's a major win in terms of what we talk about integration, like how do you genuinely integrate this into the business? And sort of the previous, I guess, like walled team of sustainability and kind of what do they do? I'm not really sure. And like this really was like, okay, they suddenly became everyone's best friend, because suddenly, as you say, back to the IC point, we have to talk about this, we have to figure this out, we have to understand CapEx, we have to understand this. So they were just super busy, but super valuable to the business. And I think it's interesting, I think about this a lot in terms of kind of real estate sustainability 2.0, kind of what would a team, like if I was starting from a blank piece of paper, how would I structure a team? And I think you also mentioned it, one of the key pressure points is around investors and clients, and so there was a sort of constant flow of information between the team and the IR or whatever you call them, the investor relationships team. But again, that team needs to really kind of understand what the strategy is, why we're doing it, how it is tailored particularly to that investor. So I think you're going to see, I think, over the next few years, just that increased integration, and whether that's people moving from sustainability into the other, or vice versa. But okay, interesting. One of the things I guess I was somewhat protected from at LaSalle was the fact that my role was European. And we've been through, or are going through, quite an interesting time at the moment geopolitically. And one of the tensions that everyone's feeling, I know, is kind of this quote unquote anti kind of ESG, noise, particularly from the US. And like I say, I was somewhat protected in so much that in Europe, regulation, although there's obviously been somewhat of a watering down of it, but certainly the investors and the clients that we spoke to were, no, this is still super important, crack on. But obviously seeing how the firm globally, and particularly US colleagues, were having to sort of navigate that. I'm curious, given your role is global, one of the things that I mean, as I say, I was a bit protected from it. So from the sort of day to day, it wasn't touching me. But as I say, how did the firm globally say to our European investors, this is really important, and to a large extent our Asia Pacific investors as well, this is really important, we're carrying on, and this is our strategy, and nothing's really changed, whilst obviously having to sort of adapt that message to the US investors, whilst still having this sort of global. I'm just curious to know, how do you balance that, and how are you finding that as a challenge?
Yeah, I mean, I don't want to underplay the ESG backlash in the States, because it's clearly very real, very much present, and isn't going to go away anytime soon. I do think that for real estate, you can. It isn't, and it shouldn't be as much of an issue. The reason being that what it boils down, often when you're talking about sustainability or ESG in real estate, what you're really talking about is improving the efficiency of buildings, making them better, investing in them. And there's also some affordable housing and that, but let's put that to one side for a moment. If you focus on the improving the efficiency of buildings piece, I don't think there are any investors out there that don't agree that making buildings better, reducing energy bills, making buildings more better for the future, suiting a wider range of occupiers, future-proof in terms of regulation. Every investor is going to agree that that's a good thing to do. So when you bring it down to that, and when you look at the mechanisms that you use to assess what capex do we invest in, when, why, what locations, and you're very thoughtful about that, and you're bringing it back to that value all the time, then I think it's fine. So I think in terms of what we do on a day-to-day basis, the genuine answer, and I do mean this, is nothing's changed. Yeah. We're still just cracking on with doing that. What we do have to do a little bit more of is make sure that we're being very clear on what we're doing, why we're doing it. We've certainly introduced some more sophistication into how we look at the net zero carbon trajectory for different specific locations and sectors. We also look at the demand from investors and occupiers in particular locations, and we kind of match that up with the performance of the buildings, which gives us an idea of, well, if this market is moving at this pace, this building needs to be here. If this market is moving a little bit more slowly, then we don't have to go as quickly, and being thoughtful about that. And we've developed a sort of framework that helps us to do that. And I think that's really appreciated by our investors. And when we talk them through that makes a lot of sense to them. Obviously, it also depends on your investor base. We have a lot of international investors, and actually a lot of our US investors are still very much focused on this issue. So it hasn't actually been that much of a challenge to us. But there's certainly a lot more discussion about it, and I don't want to underplay it, because I do know that it's quite a significant thing. I also think that what I haven't seen yet is it filtering through to corporate commitments around sustainability, which is part of that. You have that rationale of occupiers are going to want more sustainable buildings, partly because they want lower bills, but also because they've made their own commitments. When we track the commitments to the SBTi, and actually we still see that going up from corporates. We don't see any abandoning those. But obviously, we need to keep an eye on that, and that may change, and that therefore might affect the demand drivers. The other thing is that the regulations, I actually think the US has some of the best city level.
The irony about it.
Yeah, they have some, Local Law 97, DC, Seattle. They have some really relatively, well thought through. Pieces of regulation which have got more teeth than some of the European regulations. If if that changes, if some of those are rolled back on, then that will also have an impact. So I'm kind of assuming that those things stay the same, and they may not. But whilst those drivers still exist, I don't think it changes things for real estate very much.
I mean, obviously, hear this a lot around nothing's changed, we're just calling it something different is often what people say. But it is interesting, and again, thinking back to my time, there was an awful lot of noise, an awful lot of effort, and this was the main point. It's just creating an awful lot of effort to end up back where we started. It's like nothing's really changed, we're carrying on. Yeah. And it's just we've spent a huge amount of time. But the one, I suppose, and I've heard a few people say this, is that whether it comes back to one individual or not, but that sort of US, that, I guess, whatever's driving that US move in some ways has perhaps been one of the greatest kind of, has shone the light, I suppose, on greenwashing. Because if you're not doing it and you haven't been doing it well, then stop talking about it. But actually, if you are doing it and you are doing it well, and you're doing it for all the reasons that you're suggesting, because it's just, frankly, it's good business sense, then you keep doing it. I mean, there's a potential of, I guess, the pendulum swinging too far one way and it sort of becomes green hushing. But it's interesting, I suppose, in a way, it's just sort of stripped out a lot of the fluff in a way. Yeah. Because now it's not, or we have to talk about it, or we have to say something. But for those businesses, and I always got this, is like, well, we're not charities. We're not spending your money on stuff that doesn't have return. We're just looking on a different forecast, or we're considering things that perhaps some people don't think of as being needed to be considered. So yeah, I don't know. I find the whole thing anyway, let's see. You touched on it there. Obviously a huge amount of the focus within the built environment is on carbon, and for all the reasons that we all know, which we don't have to delve into. And there's an awful lot of activity, particularly on operational carbon. And I feel like if you're not sorting out your operational carbon, then frankly you should be, and where have you been? Clearly the embodied piece is a big challenge for the industry still. And so, that's clearly, but with what's coming in Europe and the regulation, and I think regulation will be a key driver of that. But I was keen, and you mentioned there, I was keen to sort of just, often not talked about, but on the sort of more social side of it. I mean, one of the big issues that we have in Western Europe and in America is cost of living rise, housing crisis. And there's a lot of talk about, and I can certainly talk more from a UK perspective, of the need to build houses, there's not enough of it, people can't afford it, etc. And obviously it's an asset class, and to even use that word, I kind of have to bite my tongue a little bit. Like, it's an asset class that institutional investors have started to come into in different ways over the last few years, or probably a decade now. And there's those on one side saying, well, that's sort of driving up prices, and there's on the other saying, well, that's the only way you're going to get stuff built. And there's sort of arguments on both sides. I'm just curious to kind of know, like, this is, to sort of pare it all back and forget the markets, forget everything, right? Housing is a human, should be a human right, right? Everyone should have a place to live. Kind of where do you sit on, like, how does this get balanced as something which is now, I'm guessing, because I know Nuveen have this as an asset class that you guys invest in. Like, where do you sit on that? And like, how do we see that going forward? Because as an asset class, like any other asset class, you want to see returns. Should we see returns in where, I don't know, it's quite a controversial point, but I'm just curious to get your thoughts on it.
I mean, I think that the public sector and the private sector both have a role to play here, and obviously if there is provision, and there needs to be more provision of housing that is provided through the we've got social housing that the private sector doesn't have as much involvement in. But we need just more housing, full stop. So I think that the private sector has to have a role to play in that. I do think it can be a challenge where, as you've mentioned, ultimately we're trying to deliver returns for our investors. Often for us, typically, at the end of that line is somebody with, it's a pension plan that's being invested. And so those people deserve good returns on their investments, and they're not the charity. So we need to balance that.
It's the full circle, right? It's the person renting it and the person that
So you need to look at it from an investment perspective. Having said all of that, I don't think many investors involved in any form of housing are looking to. They're not looking to deliver unreasonable returns. They're looking to deliver a solid return to their investors. Different types of investors will have different expectations there, and that all depends on the level of risk that they're being expected to take on. If you're asking, if investors who are involved in the development side, that is high risk, therefore it has to be higher returning, or else why would they get involved in it? If it's more about that piece afterwards and the long-term hold, then it becomes a different type of investment. That's a longer term or guaranteed income. You're therefore not looking to see quite so significant capital value returns there. So I think it's all about recognising the different types of capital that will come in at different stages of the process, but also I think there's a role for government to play here, which doesn't just have to be around subsidies, although that can be helpful. I think that government has to look at how can it de-risk along the way for the private sector. I think contributions of land for affordable housing in particular would be very helpful and would help get things moving. But I also think there are things around unblocking the planning system. I know the current UK government has made a lot of noise about wanting to do that and is looking at that very seriously, but seeing some real progress there. That removes a lot of the risk and it enables the private sector to get involved more. So I think there's a lot that can be done. I think there is a role for the private sector to play, but I think that what's needed is a real understanding at every stage of what are the different parties needing to get out of this, what are their stakeholders needing, and how can the public sector enable private capital to come in and do its job in a way that still delivers returns to investors whilst still providing what the public sector needs, which is that provision of the public good.
Yeah, it's funny. It just becomes, once you sort of get into it, you just feel like we're kind of, this is the right analogy, but we're kind of on this. The snowball's already started. We're way past that, right? It's a big ball of snow now, and it's just building momentum. And it's, well, the land's too expensive. We can't. Labour's too expensive. We can't afford it. Therefore, we need investment. That's just going to push up price. Just around we go. And we've chosen this path for whatever reason. We're on this path, and it's like and to your point, I guess, and that was going to be a question, but you've kind of answered it. Is clearly government has to step in and offer. It's got to be offer. That's got to offer the mechanism through which you can attract private capital, but you can attract it in a way that provides returns over potentially long-term profile. That means that the end price can be at a point where end users can actually afford to live in it. So, question I ask all my guests: I'm sure there's more than one, but is there a real big problem, or multiple problems? But is there a key problem at the moment that you're either trying to solve yourself, or you see in the industry that really needs solving and you wish there was a solution for, or a better solution for?
And this is probably not the most exciting of answers, but I think we need to stay focused on the role that the built environment plays in the transition to a low carbon economy. I think it plays a crucial role, and I also think there's significant value to be gained there by transforming the built environment to be part of the low carbon economy. So I think it all should work well, and if we do it at the appropriate pace, then we end up with a much better built environment that delivers better for the people using those buildings and for the environment. I think one of the key challenges to us getting to that point remains, although it's got better, the transparency of the data around that. I still think that when we buy a building, we still don't always have a very clear picture of how energy efficient that building is.
Or resilient.
That's ridiculous. I can't believe that we're still in that position. You and I have been working in this industry for 20 years now. This seems mad.
Still talking about it,
it's still often. We can make a much better educated guess now than we could have done, and I think there has been so many steps forward on this, and I think there are so many that GRES, BBP, UKGBC, CREM, there's so many that have, and those in the providers like JLL and DeepKey, and all of those have done. So we've made huge strides forward in
the whole
that.
Industry there now, yeah.
Definitely, and we have much better understanding of that data, but it's still not where it should be, and I find that slightly staggering. That and actually, when we look to the States, what they have with Energy Star is better. It's not always correct, the information, but they have a good mechanism, and Australia with their neighbours system as well. So other countries have done better than some of the European countries in tackling this problem. So that is probably my biggest sense of frustration, because I have always felt that if you introduce that real transparency into the marketplace, where if building owners and those renting buildings had a very, very clear understanding of the energy performance of their buildings, then the market could do a better job, and you don't need to have so much of this conversation around, setting targets and what should investors do in ESG, because it will just be dealt with, because people will want to buy buildings that are better or rent buildings that are better. So I think we've still got a way to go on that. I don't think there's a magic bullet to suddenly solve that problem, and I think there are lots of dedicated, intelligent, passionate people across the industry who are trying very hard to tackle that problem, and it's getting a little bit better every year. I just wish it had got a lot better quite some time ago.
Yeah, I mean, the speed of change has been, I don't know, I guess. But I mean, the one thing I guess I would say to that, and it's fully agree with you, I guess, however, when you look at how, I don't know, cost underwriting or deal underwriting is done, and the CapEx, OpEx projections over a 1 or 3 year time horizon, frankly, a lot of that is. And so I sometimes feel like sustainability and, within that discipline, energy particularly, experts are kind of been held to a certain level of rigor and accuracy, which is not comparative to how the rest of the deal's being put together. Because the rest of the deal's been put together based on assumptions, and there's a richness of data around some of those metrics, but I still agree with you that until we get better transparency, and it's not just energy operational, right? There's so many other things. Because I think, depending on what asset class it is, energy efficiency may or may not be the key driver. There might be other things that, that building may or may not be resilient for. But
and actually, probably the state we're at now is where we do have, we're able to make those assumptions in a way that is relatively comparable to how the rest of those kinds of deals are put together. So we're probably at that point now, and maybe the very nature of the type of buying buildings, it's a private market. We don't have all of that's kind of the nature of it. So maybe I'm being too ambitious in terms of where we're going to end up. And I do think that we have made some real strides forward so that we can make some of those assumptions now with confidence. I think coming back to that point, I think what's changed now is that we are either at or on the verge of that position where there is, in Europe anyway, for certain sectors in certain locations, a general acceptance that yes, greener buildings are hold their value better, lower vacancy. I think when you're talking about prime markets, there's very few people that would disagree with that now. And I think that the challenge we have is, does that roll out to the secondary markets? Does it roll out to locations where buildings just have a lower inherent value, the non-institutional type of real estate, and is it a wave that will roll through, or does it remain something that's just within those sort of more?
I mean, you're touching on something that I had down to talk about. We've run out of time, but really wanted to talk about that. Both your that lens, but also your role, I guess, on those industry bodies, and just how that information and knowledge and then action is then, funny enough, I was on the way in this morning, I was speaking to someone from a real estate company up north, and they were talking about, we don't have anyone in post. We don't go to any of these events. We don't go to these industry bodies. We just got different pressures. We've got different challenges, but we want to move forward. And how do we do? Where do we start? And I think sometimes when you're sat in London and you go to these events and you sat around these tables, it's like as if everyone's doing the same thing, and it's like, okay, well, this is the industry's moving. But actually zoom out and go, well, actually, that's only a percentage of the market, which tends to be international anyway. And so the rest of the country is not. And funny enough, I had the episode I had with Julie Hirigoyen, she talks a lot about this, is, if you get it right, the fact that, if you go around the country, and I can speak personally from this, my high street where I live, it's just shop closes, another shop closes, it's becoming, these high streets are sort of breaking down, and that's causing a lot of the, challenges that we're facing, in the country, and actually by using sort of the built environment to inject life and vibrancy and energy into these places could do so much more for the community generally, the social fabric and the economies, local economies. It just needs to be well thought through and done in a way which is affordable and economical from everybody. So it could be if government and sort of private capital kind of came around and had the right, had all those kind of things sort of aligned together. Had a team like yours, basically. Last question. If you could wave a magic wand and get one thing done from government or business leaders or individuals, or all three, what would it be?
It would be focusing on what we were just saying, that sort of long tail of probably 60 to 80% of buildings, and getting the right, the combination of the regulation to bring that floor up. But you need to be careful on doing that, because there's a big burden on business anyway. As
we see with EPCs, right?
Exactly. So there has to be a combination of bringing that regulation in, but also making sure there's the right package of support, whether that's through cheaper financing or subsidies or whatever it is to enable the tail of the built environment to come up, because I do worry about that as well. And I agree with you, buildings that are worth hundreds of millions in central London, they're not going to be part of it's not going to be a challenge for them to get to where they need to be. It's all of it's those small regional offices market, right? And high streets and things in the in the regions in the UK, but everywhere. So tackling that and making sure that we're taking that seriously and using that as an opportunity, I think, to deliver, to revitalise and deliver growth is really important.
Again, it requires a bit of a mindset shift, but I think if there's a way of government to see that and see it as part of a catalyst, and this is often certainly our jobs, and I found this, is that you're often laboured as sort of like this risk, and it's about resiliency and risk and cost. And actually, there's a completely different narrative here. It's about opportunity and growth. And if we can just flip that narrative and think about the ways in which everybody wants the same thing, clean air. We want a nice place to go. I don't know. It just seems. I know it's simplistic and it's hard, but I think there's so much there to be said for flipping the narrative and just being much more focused on opportunity. There's so much we didn't talk about that I was really keen to talk about, so we'll have to have you on again. But thank you, Abby.
Thank you, Alex. It's been a pleasure.
Cheers. Thank you. That's it for this week's episode of The Future We Build. I want to thank you so much for listening to us wherever you are. If you're navigating these same challenges, from pricing in climate risk, decarbonising buildings, or if you're scaling a new product or solution, join us on LinkedIn. Search for me, Alex Eds, or follow our official page at The Future We Build. That's where we break down these episodes further, discuss the topics and discussions, and connect you to the leaders engaged in this mission. This show and the guests I invite will be influenced by the conversations we have on LinkedIn. So if you have ideas or would like to hear the thoughts of an industry leader, let me know, and I look forward to continuing the conversation with you there. You can find the show notes and full transcripts on our website. And if you found today's session valuable, please hit subscribe on Apple, Spotify, or wherever you find your podcasts. Thank you for listening. I'm Alex Eds, and I'll see you next time.